Bootcamp episode 8. This video I'm talking about how to form your entry model. This is a really important video to watch and not skip over. This is the model that I use to get me quite a bit of payouts. If you know me, over $71,000 in 7 months, and then over $100,000 lifetime payouts. This model is super simple, and the thing about trading is there's a rabbit hole people go down is they make it so complex and they learn all the concepts and everything just to find out that all you need is a simple model, and this is it. So first, what you need to see it every day for your model to play out, or not for your model to play out, but this is what you're going to see every day, and you're going to try to catch the move in this radius. So you need to find a range where we are chopping like this with a high and a low. You need to see price manipulate below the low at a set time, 9:30, and then you need to catch the entry to go above the highs. It's not going to look exactly like this, but every single time you get an entry, when you're done the day, you will see a sell side purge and a buy side purge. The sell side's at 9:30, the buy side form the entry at 9:50 to 10:10. This will form every single day because this is what happens every single day. Sorry. Is price will take form of sell side and buy side liquidity. Now, let's dive a little bit deeper and figure out what is our entry model. So this is the basic of what you're going to see. When you are in the day looking for the actual setup, you're going to see this. Let's say it's post 9:30. This is what you're going to see. So get familiar with seeing this. If you're looking for longs, get familiar with seeing sell side purge at 9:30, buy side relative equal highs. This pattern, this price action indicates that we're going up here. And what happens? Get used to seeing this, right? A break of structure, a volatile move in the opposite direction. This indicates we're going up here. And then there we go. That's the trade playing out. That's what you're going to see in the day. That is what you're trying to target. Now I'm going to show you the entry model to find that. But to be able to find that, you need to identify the profile that you're in. What do I mean by that? Identify that you're in manipulation, meaning the move that you're watching play out is fake. So the time when you see this, you're going to enter long. So you can see here, we took these lows at what time? 9:30. That's manipulation. We moved down at 9:30. You can see that we started moving up higher at what time? 9:45. At 9:45, and I talk about this, is there's a window of manipulation, 9:30 to 9:45. The 9:45 to 9:50, the 5 minutes should bring some sort of volatility in the opposite direction. That's exactly what happens here. You can see it break structure, and then you look even closer, and then exactly at 9:30, we trade into the first presented fair value gap, or the first traded to fair value gap, and respect consequent encroachment of the fair value gap to the tick with the wick. That forms our only entry in this whole range all the way up to these highs. So that is your trade. That is pretty much it. And it's very, very simple. Is a market structure shift or a break of structure, low, high, lower, lower, higher, high, or just a break of structure. You don't need both. Yeah, I mean, you don't need a market structure shift and you don't need a break of structure. You need either or, right? So you need price to take a form of liquidity at the 9:30 to 9:45 range, and then you need price to break structure after that, which is what it did here, during 9:45 to 10:10. Form structures, right? 9:45 to 9:50 broke structure, and then 9:50 to 10:10 formed the setup and delivered us here. Very clean trade. And what you could get when you take institutional order flow entry drill trades like this is you can put your stop loss very tight. You can put it at the low you can put at the low of the fair value gap if you want to be more conservative with this price action. So if you did that and you picked the conservative stop loss, you still got 4.2 RR in a few minutes. One down close candle in that whole range. That is just beautiful. That is just beautiful. And identifying, there's other things in these concepts that you need to identify, right? These are just common sense things that you need to have as a trader. There's a bunch of highs here. What does that mean? If we're going to take these highs, we need to take these highs fast. What did it do? It took it fast. Low resistance liquidity run. This is an indication that when price goes to take these highs, it's going to be in low resistance liquidity run. That's what happened. Now, what are the odds that the one down close candle happens right as it trades into this fair value gap? Because price is trying to manipulate people into closing their position, right? Let's just look here. This whole range is moving higher. And then right here, people are trying to the markets are trying to manipulate people into taking into shorts. So then it can drive price up higher. That's a valid order block. Okay? Look at what it does here. Right before we have this massive drive up higher, what happens? Price takes liquidity and slows down. And it continues to go a lot higher, obviously. But the main thing in this model and in this entry is you need to have your own concepts, your own narrative, your own trading behind it. Trading isn't just a set thing of rules that you need to just wait for and find. And that's controversial. Yes, it is for your entry model, but for your finding narrative, you need to figure it out on your own. Your tape reading price action. See, oh, we did this, we did that, and adapt to the markets and take what the market is playing out to you. But for your entry, you need to have a specific set of rules that you can write out on a card. And when you see it, you take it. 930 manipulates 950 and forms the entry. I personally like the break structure, market structure shift, fair value gap, and then when it trades into the fair value gap, it respects consequent encroachment. Whatever you like, you can do. But I recommend using the macro, the time rules, the time windows of 950 to 1010 for your entry, 930 is manipulation. I talk a lot about it in the previous videos about times, the previous 2 videos I had, so I recommend watching this. But this is pretty much it. This is everything that you're going to wait for. And this is what your day is going to look like. And this is what you're going to try to find. You're going to see price moving on. And then 930 is going to take a form of low. And then you're going to see it move up higher and take the highs. You jump in deep. Ugh, I don't know how to speak. You jump in deeper. You jump in deeper. And then you see that price will take the low at 930, price will break structure at 945, and price will trade into the inefficiency to create your setup at 950 to 1010. It's not always that simple. Sometimes it's a little bit harder to catch. But that's your setup, man. That is your setup. And that's what you will be catching. And this creates profitable traders. I know traders that make millions of dollars a year in payouts, and this is what they use. That's it, guys. That's completely it. That's everything you need to learn about this entry model. This is something you want to go and back test and forward test and test with demo and paper trading, and come back to me and just tell me how well it works, because I know it works well, because so many people in my trading community have told me how it's changed the whole trading career. If you want to join my trading community for free, you can look at the link in description. I now have a free access. So you go to the lionsden.ca and then you click the free Discord, and you will be able to join the Discord for completely free. You can also get a 7-day free trial for the VIP to watch my daily live streams, as I live stream every single day in the Discord, 9:25 a.m. So that's pretty much it. With everything that I taught you, you need to be disciplined. And once you have this entry model, all you need to do is only wait for this. It will not, sometimes it might not show every day. Sometimes it will show, but it won't be high probability. Your goal is to wait for this. Who cares if there's a move? You know how many people had FOMO about missing out on shorts to these relative equal lows? I did at some point. Like, you know how many people had FOMO in this whole move? Feeling like they're missing out on the move? Who cares? If you see a move happening, you can't care. And then one last thing, and this is a really important thing about about this whole model and about the way you trade. There's stages. There's 3 stages to this trade. There's this stage, there's this stage, and then there's this stage. That's continuation. Then there's this stage, there's this stage, then there's this stage. That's reversal. There's 2 ways to trade this model. We're continuing from price action prior to 930. 930 also continues. And then we manipulate, possibly at 930, right? Let's say if we're opening up and we're just trading lower, 930 can manipulate. This is stage 1. And pay close attention to what I'm about to say here. Stage 1. Identify that you're in stage 1. Identify that you're then in stage 2, which is most likely to happen at 930. And then identify right here. That is what you need to identify when you see a break of structure. That is what you need to identify. In this little up rally, you're going to see a break of structure. That is what you need to find to get this trade. For here, consolidation, 930 manipulates below a low. Okay, so stage 1, identify that you're consolidating. Stage 2, identify that you're manipulating. Stage 3, find the break of structure, find the entry. Stage 4, I guess, ride it out and take profit. That's it. So keep trading simple. Identify the stages that you're in. And that's pretty much it in the trading model, guys. Wait for your setup, one trade a day, and this will change the way you trade completely. I promise you guys, a draw on liquidity at a set time and an entry at a set time, and that's it. That'll change the way you trade. Remember, this is your entry model. Your trading model is different. The way you read price action on the higher time frame is different, and you need to do that on your own and learn how to do that. There's key topics like higher time frame liquidity sweep, higher time frame fair value gap, whatever. That's your higher time frame reading. No one should teach you that. You should learn that on your own. But for your entry model, you can find this. This is one of the highest probability, best entry models out there. And I promise you, if you have a good basic understanding of higher time frame narrative, you can find this and become profitable with this if you're disciplined enough to wait for it. That's pretty much it. Thank you guys for watching the 8th episode of the boot camp. And we're going to have another episode coming up talking about a little bit more complex trading model entries and more discipline and psychology aspects of this boot camp. But we are coming up to the close of the model side. So everything that you need to learn about price action here for this model is almost done. Then I'm going to bring you onto higher time frame narrative. That's going to be more complex. But thank you guys for watching, and I'll see you guys in the next video. Take care. Peace.